Topic 1. US and EU impose sanctions on Russian oil companies, impacting global oil prices and supply chains. The United States and the European Union have announced sanctions against major Russian oil companies, Rosneft and Lukoil, as part of efforts to pressure Russia to end the war in Ukraine and weaken its ability to finance the conflict. These sanctions led to a rise in global oil prices, with Brent crude and West Texas Intermediate (WTI) prices increasing by over 3%. The US sanctions aim to limit Russian oil exports and reduce purchases of Russian oil in Asian markets, particularly by India and China, prompting a search for alternative supplies from the Middle East, Africa, and South America. The EU has also approved a sanctions package banning imports of Russian liquefied natural gas, LNG, further restricting Russia's energy revenue. These measures are expected to have long-term effects on the Russian economy, although Russia may continue to export oil through alternative routes despite the sanctions. The sanctions are increasing pressure on Russian oil exports and contributing to uncertainty in the global oil market, leading to heightened price volatility and supply chain impacts. Topic 2. Tesla faces financial challenges with profit declines and vehicle recalls, highlighting issues in the electric vehicle market. Tesla is experiencing financial difficulties as its recent quarterly earnings fell short of Wall Street expectations, attributed to rising tariffs, increased research costs, and a decline in regulatory credit revenue. The recent legislation from the Trump administration is expected to further decrease regulatory credit income. Additionally, Tesla had to recall 63,619 Cybertrucks due to software issues, along with recalls for Model 3 and Model Y vehicles due to battery pack defects. These challenges underscore the difficulties facing the electric vehicle market. In response to declining demand, Tesla is launching lower-cost variants of the Model Y and Model 3, which may pressure profit margins. While Tesla plans to expand production based on confidence in its autonomous driving software, increasing competition in the market raises uncertainty for its future outlook. Topic 3. Meta cuts jobs in its AI unit amid expansion efforts, reflecting shifts in the technology sector. Meta has announced a reduction of approximately 600 jobs in its artificial intelligence (AI) division as part of efforts to make the unit more agile and responsive. This move affects the Facebook AI Research (FAIR) unit and teams related to product AI and AI infrastructure, while the newly established TBD lab remains unaffected, focusing on developing next-generation foundational models. Meta is encouraging affected employees to apply for other positions within the company. Recently, Meta secured a $27 billion funding deal with Blue Owl Capital to advance its largest data center project, allowing the company to transfer initial costs and risks to external capital while retaining some ownership of the project. Meta is reorganizing its AI efforts through superintelligence labs, with CEO Mark Zuckerberg leading aggressive hiring to activate the AI division. Since 2013, Meta has invested in AI, launching the FAIR unit and bringing in Yann LeCun as chief AI scientist to build a global research network focused on deep learning. These changes reflect shifts in the technology sector and adjustments in Meta's AI strategy. Topic 4. Trump's controversial policies and sanctions impact international relations and domestic politics. Former President Trump's controversial policies and sanctions have significantly impacted international relations and domestic politics. His policies have strained relationships with US allies, triggered trade wars, and deepened political divisions within the country. These actions have altered the US's diplomatic standing and elicited various responses in domestic politics. Topic 5. Inflation and economic pressures continue to affect global markets and consumer behavior. President Donald